Hello, everyone. I hope you're having a great weekend, and welcome to another episode of our weekend series of market analysis. In this video, we are going to delve into a comprehensive follow up on the XAUUSD market dynamics, particularly after witnessing gold reversing all gains made during the early part of last week to close the week at its starting point. It's been an interesting journey for us as we navigated through both the bullish and bearish sentiments, securing over 1,000 pips along the way. Now, looking at the technical structure on your screen right now, this was what we were looking at prior to the beginning of last week. And remember that we did acknowledge the fact that price action was sitting above that robust demand zone between the 2,220 275 and the $2,300 area, giving us signs that buyers has a higher chance of continuing the uptrend move. And as a result of this observation, we were looking at price action breaking out of these descending trend lines to give us the privilege of continuing the uptrend move. And at the beginning of last week, we can see here our first point of entry was at the breakout retest of the first descending trend line. And we also added more positions at the breakout retest of the second trend line as we rode the momentum all the way into the $2,370 area. Then we also joined the decline as we rode it all the way back into the retest of that descending trend line that was broken during the midweek. For a detailed breakdown of each of our points of entry, I encourage you to check out the link provided in the description box below. Now, the 1.7% crash in gold prices on Friday can be linked to the latest US economic data, with higher PMI figures indicating robust manufacturing and services activities, hereby hinting at prolonged inflation and higher interest rates. As a result of this, investors' immediate reaction was to ditch gold and bought more of the US dollar, leading to a massive sell off ahead of the weekend. Nevertheless, we cannot rule out the fact that gold still has a bullish chance amidst the prospect of increased purchases by central banks, particularly from Asian central banks. According to a survey by the World Gold Council, 81% of international central bank reserve managers expect to increase their gold holdings in the year 2024. And in fact, this is the highest percentage since the survey began in 2019. Now, given this contrasting viewpoint, how will the price of gold unfold in the coming week? Will the bullish momentum continue as it appears that price is back to retest the descending trend line we identified at the beginning of last week? Or will there be a downtrend continuation happen? Our approach to answering this question will involve the adoption of our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to gain deeper insight into the market's potential response to these changing dynamics. Before we dive into the details, please, I would like you to note that this presentation is designed basically for educational purposes only. Remember, forex trading carries its own inherent risk, so proceed with caution and seek advice from professional financial advisors before making any investment decisions. So, with that being said, here, let's dive right into the business. So, our first point of contact today will be on the daily time frame, where we do want to be having an holistic perspective into what has been going on in this market. Now, to have an insight into this latest development, I was able to take into consideration the character of price action since the month of October of last year. And if you look at the structure closely, you would agree with me that the momentum has been very bullish. And as a result, we have a couple of ascending trend line, which we will be using to guide our trading decisions for this new week. And of course, you know how we use our ascending trend lines in this community. As long as price remains above them, we'll continue to look out for patterns and structures that supports the idea of buying. The only condition that will make us sell is for these ascending trend lines to be breached and broken to the downside. Now, besides this ascending trend line, it's important for us to also take into consideration what has been going on in this market since the beginning of the month of April. Now, if you look at the structure closely, it is quite clear that the market has been consolidating, in fact, confined within the 2,450 and the $2,290 area to emphasize the prevailing uncertainty in this market. Now, in addition to that, is this demand zone that we have here between the 2,290 and the 2,320, which obviously has served as a resistance for sellers, as every attempt by sellers to break through has always been met with strong resistance from the buyers. And this continued into last week trading session, giving us a robust demand zone to work with ahead of the new week. Now, in addition to the structure is our key level, which is duly situated at the 2320. And as you will see, this level here had played a significant role in determining the direction of price action since the beginning of the month of April. And of course, you remember how we treat our key levels. It serves as a yardstick to guide our trading activities, where if price trades above the key level, we will be looking out for patterns and structures to buy, and we are not going to be considering selling unless the key level is breached and broken to the downside. And in fact, look at how beautifully the key level shares a confluence with that ascending trend line. Now, the question going into the new week is whether or not price will respect this ascending trend line to continue the momentum or breach it to incite a sell off in this market. Now, to navigate this current market dynamic, I have a simple trading setup as usual on the 4 hours time frame, which we will be adopting to manage our trading decisions next week. But before we scale down into the 4 hours time frame, it's important for us to keep tabs with the fundamental factors that will be influencing the market dynamics around the structure as we prepare for the new week. And of course, by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information to strategically position ourselves for the next move. Now, based on the asset we are looking at, we are going to be focusing on high impactful economic features from the United States economic docket. Now, the first high impactful event is coming in on Wednesday, that's June 26th, and we are looking at the bank stress test information. Now, this report here is an assessment of the major banks in the United States' ability to withstand economic and financial shock, and this is conducted by regulatory authorities. The result of this test can significantly impact trading as they provide insight into the stability of financial institutions. A positive result can bolster confidence in the banking sector, potentially strengthening the US dollar, while negative result can lead to market volatility and currency depreciation. Then fast forward to Thursday, June 27, we are going to be looking at the gross domestic product annualized for quarter one. This data here represents the annualized percentage change in the US real GDP during the first quarter. Then on Friday, June 28th, we are going to be looking at the core personal consumption expenditure, popularly known as the core PCE. And for those of us who do not know, this data here measures the average change over time in the prices paid by consumers for goods and services in the last 30 days. So, these are the high impactful event we are going to be looking forward to. And of course, the anticipation of this data usually influence the market sentiment as it will be providing insight into the health condition of the United Kingdom. And of course, this will reflect on the chart as price action. Now, talking about price action, let's scale back down into the 4 hours time frame where I do have a simple setup that we will be using to navigate this current market dynamics. So, right here on the 4 hours time frame, what I did was to take into consideration the character of price action in the last 4 to 5 weeks, and this is what I was able to come up with. Now, the first thing you would notice here is how price action most of the time during the last 4 or 5 weeks has been confined within the 2,360 and the $2,320 area. That's like a $400 400 pip range bound structure that we have here. Now, with this situation here that's revealed how price dropped back into our key level for the week, for next week at the 2,320, which interestingly shares a confluence with that ascending trend line we spotted on the higher time frame. Now, you would agree with me that we are at a crucial juncture in this market where, depending on how market participants react to this confluence here at the beginning of the week, will determine if we are going to continue buying or selling. Now, to buy, obviously, price is still sitting above the ascending trend line. So, if the week starts with continued buy pressure, maybe transitioning into, let's say, a reversal pattern, and for this case scenario, let's project a double bottom structure, then we will be looking to buy the breakout and join the uptrend move. However, if the bearish momentum from Friday session wants to continue, then a breakdown retest of both this ascending trend line and the key level at the 2,320 will be all we need to continue the downtrend move. So this is my simple view on the XAUUSD ahead of the new week. Trust me, I will be with you in the comment section after monitoring how market participants will be reacting to the structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decision, I will greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.